Hi guys, and welcome back to another episode of Future Funded. Today I'm going to be doing something a little bit different. I'm going to go through my step-by-step smart money concept strategy using S&P 500 or ME. This was one of the main reasons I used Future Funded, just because I like to trade FX and futures and I know they have great spreads. So I'm going to break down the methodology that I use. It's pretty simple, to be fair. It's based upon price action, liquidity sweeps and breaks of structure, and it can be applied to all markets. So let's get into it. So first and foremost, the first key element we need to understand is the higher time frame structure. We need to understand what's actually moving the market. We need to understand our directional bias overall, as it gives us a good picture and a good indication of where we could likely go over the course of the next 2-3 weeks, give or take maybe even a month and so forth. So the best way to do it is always to start on the weekly time frame for my strategy. I look at where is the lowest point that price got to before we took out the high. Well, previously speaking, this right here was the previous high. Okay, so the lowest point that price actually got to was here before we then broke structure to the upside and took out that high. So this is what I would deem as the weekly internal low, and the weekly internal high is up here, because currently speaking, this is the highest point that price got to. Okay, so this is how I would deem my lows and my highs to begin with. Let me just mark that out for us. Now, stepping down into the daily time frame, we can now see a little bit of a similar story. All right, we can see and we understand that the daily external structure is the same as the weekly internal. So the daily external low is here and the daily external high is here. So currently speaking, everything within this range on the weekly and daily external is bullish, and we should be looking for longs. But going down into the internal structure, the working range, which is everything that is happening right now, we can clearly see we've got a new high formed right here. And the lowest point that price got to was here before we created a new high once more. So price got down to this point before we broke structure and broke the high and created that new high. So now our daily internal structure is also bullish. And this is our daily internal range from this low to this high right here. All right. So now currently speaking, what we know is that our weekly internal, daily external and daily internal structures are all bullish. Okay, so going down now into the 4-hour time frame, we can really start to focus on the internal ranges that we see. All right, so for example, let's say on the 4-hour, we can see a break of structure right here to the upside. Price then comes back, forms a higher low, moves up higher, forms a new higher low, and then we get the last high right here. So now currently speaking, our 4-hour range low is this low right here, and our 4-hour range high is here. So internally, our 4-hour range low is here, 4-hour range high is here, and 4-hour external range is the same as the daily internal range. Okay, so the daily internal range low is here, which means that our 4-hour external range low is here and our 4-hour external range high is here. Okay, so we know that we're incredibly bullish because, as we can see, we've stepped down from the weekly to the daily to the 4-hour, and it's all lining up bullish as we speak. So going down into the 1-hour time frame, we can see we had a high right here. We created that higher low before we broke this high again right here. So the 1-hour internal range is the same as the 4-hour internal range on this particular occasion, because this was the lowest point on the 1-hour that price got to before we broke to the upside. All right, so now it's just about understanding where are our levels, where are our points of interest, where is the liquidity, and where is there areas where price has broken structure. So if we go into the working range now, we can see that price has started to step down. We formed a lower high right here. Price created a new low right here, lower high right here again before we created a new low once more. All right, so we have this as currently the previous low. This is the high. Price came down to the lowest point right here. So if we go into the 15-minute time frame, we can start to really see this play out. So we've got lower high, lower low, lower high, lower low, break of structure on the 15-minute time frame. Okay, now funny enough, price broke structure after reacting from this 15-minute point of interest right here perfectly. It literally grabbed all the liquidity, did a deep liquidity sweep before reversing. And if we have a look, we can see that this actually played out over the course of the Asia session. All right, so it's not necessarily a session that I would look to trade, but it's still good to understand how it's playing out and when it's playing out, because time does really play a big factor in when I enter my trades, whether that be in the London session or the New York session. So as we can see, we broke out during London session, and then we started to create a higher low, a new high. We then broke that to the downside, which is fine, okay, because we wanted to see price retrace back down to these lower points and take out liquidity. Remember what I said previously, we want to see points of interest, breaks of structure, and liquidity sweeps. That forms our entry model, okay? Well, right here, if we have a look, if I go back to the hourly time frame, we can see a point of interest right here. A beautiful point of interest which creates a lovely imbalance. Now, when we go back into the lower time frames, we can see liquidity gets formed right here and price moves even higher. So we're anticipating now that price is going to come back and take out this liquidity. Now going into lower time frames, if we enter into the 1 minute time frame, we can start to see more areas of liquidity. Do you see here, we've got triple lows essentially. So this is a nice area for price to come back, sweep before we get our entry. Okay, now once price taps back into this point of interest, we now have two liquidity sweeps. Price has pumped down, swept everything before we get that reaction. Now this is quite an aggressive reaction whereby I'm not necessarily waiting for confirmations in terms of 1 minute breaks of structure, but because I've got every single time frame from the weekly, daily, 4 hour, 1 hour, and 15-minute lining up as bullish, and then we've got a 1 hour break of structure and a 15-minute break of structure in those internal ranges, I can now look to be more aggressive because I have so many confluences from directional bias to go to the upside. And remember when I said that time plays a big factor? Well, if we have a look, when does this actually start? This starts at 2:30, New York Open. Price pumps down, takes out all the liquidity. So this is a perfect time for me to get into the market. So as soon as I get that reaction on the 1 minute time frame, given the fact that we've just had New York Open, given the fact that we have all of the time frames lining up as bullish, we've swept liquidity, we've broke structure to the upside, I can now enter this trade. And where do I go? I start to look at targets where there are areas of liquidity. Okay. Yes, I could say that price has come back to the origin of when the New York move actually started, which is, if we have a look at it right here, this is where the move actually initiated to the downside. So I could go back up to there, but I saw that there was liquidity sat just above here. Okay. Now markets, in my opinion, and look, every strategy is different. People work off different methodologies and so forth, but my strategy is based upon looking for areas of liquidity as my target, because I believe that these are the price levels or the points at which price needs to get to before it starts to move off again. Hence why I put my target right up here, just above this point of interest where I knew there was sat liquidity and orders sitting just up there, and then I could aim for a 1 to 4.6 or 4.06, I should say. Okay, and at that point, it's just about how do I manage my trade now? How am I going to manage it effectively to the point where I can pay myself, take partial profits out of the market, but still do it in a risk-free way and still be able to extract as much out of this trade as possible? So first and foremost, what I look for is very simply points of interest moving to the downside where price could potentially reverse on me. Well, the first one was here. So initially, I'm taking first TP target right there. Second TP target is right here, and then full TP. So I took 2 TP targets off this trade. The moment I got to TP target 1 was the moment that I moved my stop to break even. Okay, because now I'm in a risk-free trade. I don't want to lose any money on this trade now because we've gone past TP target 1. I've just taken partials out the market and I want to be in a risk-free trade. All right, I want to manage my risk accordingly. It's not about how much I make, it's about how I protect my capital. That's one of the most crucial fundamental aspects about trading. And it's something that I think most people get confused with, or their mindset isn't aligned with. Most people are looking for these home runs. They're looking for these big 1 to 5s, 1 to 8s, 1 to 10s. But in doing so, their greed comes into place. So they don't manage their risk accordingly. All right, they don't take partial profits. They try and go for a full home run with full risk on. You can do it. I'm not saying that it's wrong. I'm not saying that it's unachievable. There are plenty of traders out there who do have that methodology and it probably works for them really well. I'm just saying, for my strategy and the edge that I've developed in the market, it doesn't play out too well for me whenever I've tried to do that, and I would prefer not to allow my emotions to come into place. That's why I have a systematic approach. That's why I have TP target 1, 2, and then move stop to break even and try and get into a risk-free trade, because that keeps the emotions out of it for me. And it just allows me to focus on being mechanical and being like a bit of a robot, really. And this is the point where you just have to focus on rinse and repeat. You don't need to do anything else other than just taking similar trades every single day. And if you look, ultimately, guys, at the end of the day, you're not going to win every single time, right? We all know that in the markets. But so long as you're taking similar positions every single day and your methodology is similar and your edge is present every single time, you're doing the correct things. And that's all you can do in the markets. Be as repetitive as you possibly can when it comes to trading. Don't alter anything. Don't change anything unless you've got data to showcase to you that you can do so. Definitely don't change anything based upon your emotions. Go back test it, forward test it, and then look at it from a systematic approach and say, okay, well, I'm going to refine this now because my data shows me that if I do X, Y, Z, I might be able to extract a few more pips out of the market on this particular trade or this particular setup. That's the way to look at altering things. But unless you're doing it that way, don't change anything, guys. Keep everything absolutely 100% the same and just rinse and repeat. I hope that makes sense, guys. So guys, I hope you found that useful. That was my step-by-step strategy on how I even passed my FutureFunded account, and is the reason that I'm getting regular, consistent payouts by FutureFunded. So please go check out their website, get your challenge, and I'll see you inside.